Welcome back to Explain the Charts, everyone. Today, September 20th, 2025, we have a truly fascinating and dynamic situation unfolding with Bitcoin, BTCUSD, that demands our full attention. Let's kick things off by looking at the broader picture on the daily chart, showing all available data. The crypto world is abuzz with significant macro news that's directly influencing Bitcoin's recent movements. First up, a massive tailwind for the entire crypto market arrived on September 18th when the Federal Reserve announced its first interest rate cut of 2025, dropping the Fed funds rate by 25 basis points. This dovish shift by the Fed, driven by concerns over a weakening labor market, is widely seen as a catalyst for increased global market liquidity, incentivizing investors to reallocate a projected $9.5 trillion from lower-yielding assets into higher-risk alternatives like Bitcoin. Almost concurrently, the SEC fast-tracked universal standards for spot crypto ETFs, greenlighting options beyond just Bitcoin and Ethereum, which is expected to accelerate institutional inflows significantly. Adding to this bullish sentiment, the U.S. Congress recently hosted 18 crypto executives on September 16th to advance the Bitcoin Act. This groundbreaking proposal aims for the Treasury and Federal Reserve to acquire 1 million Bitcoin for a strategic Bitcoin reserve, valued at over $115 billion at the time of discussion, with Bitcoin then trading around $115,140. These developments paint a remarkably bullish long-term picture for Bitcoin, reinforcing its position as a strategic global asset. Now, let's turn our attention to the charts to see how these monumental news events are translating into price action. On our daily chart, we can clearly observe Bitcoin's strong uptrend established over the past year, consistently forming higher lows. Zooming into the last few months, since early August, Bitcoin has rallied from around the $110,000 level, hitting an impressive peak of approximately $123,000 in mid-August before a slight correction. This overall resilience underscores the underlying strength in the market, supported by the growing institutional adoption we just discussed. Let's narrow our focus to the crucial period of September 18th and 19th on the 15-minute chart to analyze the immediate impact of the Fed's rate cut and the SEC's ETF news. We can see a rapid price surge, with Bitcoin briefly touching highs around $118,000 as reported by news outlets on September 18th, an impressive move confirming immediate positive market reaction. However, the price quickly pulled back from these intraday highs, closing the daily candle on September 18th around $117,090 and further retracing to approximately $115,690 by the end of September 19th, as shown by our latest data. This immediate pullback aligns with analyst warnings of potential short-term market volatility and investor recalibration that often follow major policy announcements, despite the bullish long-term implications. Looking at the one-hour chart, we see Bitcoin has been consolidating around the $115,000 to $117,000 range in the last 24 to 48 hours, absorbing the recent gains and finding a new short-term equilibrium. The current price, as of our latest data point, sits at approximately $115,688, indicating a period of consolidation after the initial excitement. From a technical perspective on the daily chart, key resistance levels to watch are the recent intraday high around $118,000, followed by the mid-August peak near $123,000. A decisive break and sustained trading above these levels would signal strong bullish continuation. On the downside, immediate support can be found around the $114,000 zone, which has shown resilience in recent days. Further, the psychological level of $110,000 remains a critical support, reinforced by previous price action in early September. For traders, identifying these zones is paramount for setting entry and exit points, as well as managing risk. Reasons to be bullish are overwhelming: the Fed's dovish stance injecting liquidity, the SEC clearing the path for more ETFs, and the serious legislative push for a strategic Bitcoin reserve all point to increasing mainstream adoption and demand. The fact that over 72% of Bitcoin's circulating supply is considered illiquid also suggests reduced sell-side pressure, further fueling a positive long-term outlook. However, reasons to exercise caution also exist. The rapid price increase to $118,000 was followed by a swift retracement, indicating some profit-taking or short-term exhaustion. The news also mentions a rising wedge pattern on the 2-hour chart around $117,200, which typically signals caution, suggesting that while the long-term outlook is strong, short-term corrections or consolidations could occur. Additionally, while not directly impacting price today, discussions around mining cost pressures and quantum computing risks highlight long-term considerations for the ecosystem that investors should be aware of. In the short term, maintaining above the $114,000 support is crucial for bulls to consolidate recent gains. A break below this could see a retest of $112,000 or even $110,000. For a bullish continuation, we need to see a decisive break above $118,000, ideally with increased volume, which would open the path towards the $123,000 resistance and potentially beyond. Long-term, the structural changes driven by institutional adoption and dovish monetary policy suggest strong upward momentum, with many analysts eyeing figures well above current levels, some even speaking of a $500,000 supercycle. To recap, the immediate price levels to watch are support at $114,000 and strong resistance at $118,000 and $123,000. A sustained break above $118,000 has a high likelihood, around 70 to 80%, given the overwhelming bullish macroeconomic tailwinds and increasing institutional interest, especially if upcoming economic data continues to support further Fed rate cuts. Conversely, a dip below $114,000, perhaps a 20 to 30% likelihood, would indicate short-term weakness or profit-taking and reinforce the cautionary technical patterns mentioned earlier, potentially leading to retesting the $110,000 level. Always remember to conduct your own due diligence, integrate technical analysis with fundamental news, and manage your risk carefully. Don't forget to like, subscribe, and hit that notification bell to stay updated with Explain the Charts. Thanks for watching, and we'll see you in the next one.